and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition, we are going to take a hard look at, well, what else but the recent fraud at Punjab National Bank that has hogged the headlines and for the past so many days. But we are going to try and look at it, minus the hype, and see what went wrong, what are the reasons that the fraud occurred, what are the possible solutions, and see whether we can restore some sanity to the debate. And who better to do that with than two experts in the banking arena, Hemendra Hazare, independent analyst who has been writing for long on the banking sector, and T.T. Ram Mohan, Professor Economics, IIM Ahmedabad, who also has been commenting on the banking sphere for many, many years. Thank you so much, Hemendra, TTR, for joining me in this discussion. So, let me start by asking both of you in turn that in the entire discussion and debate that has followed the discovery of the fraud at Punjab National Bank, has the discussion and debate somehow got hijacked into areas that do not have very much salience to the immediate issue at hand, which is of fraud and how to fix the systems and procedures in banking and how to ensure that such instances do not recur at least more frequently in future. So, my question is that are we missing the wood for the trees? Are we taking our eyes off the ball, the main issue in this particular instance? Let me start with you, TTR.
Well, I certainly think that there's a lot of hype and exaggeration over this particular issue, and it's also being given a certain political slant. What has been lost in this entire debate so far is that the kind of fraud that has taken place relates to what we call operational risk, as distinct from credit risk or loan risk. So, what has happened here is breaching of systems and processes on the part of insiders, perhaps in collusion with outsiders. Now, this is very different from a situation. So, a certain loan is made which is not supposed to be made. This is very different from a situation where a loan is made by management with mala fide intent. So, I know there are two very different situations, and I think you need to understand that where operational risk is concerned, it's not very meaningful either to fault top management excessively or to give a political coloring to the issue. So, we got into a slanging match between the various political parties, where the Congress is trying to pin the blame on the BJP, and the BJP is trying to say it all started in the UPA regime, and so on and so forth. And it's very important to understand that whatever the political patronage that Nirav Modi may have enjoyed under successive governments, that doesn't have much of a bearing on the operational fraud that has been perpetrated. It would have been a different matter if certain loans had been sanctioned in disregard for commercial norms, but that's not the case here. So, I think we need to get a very clear understanding of the type of fraud that has happened, and to be very clear that this does not have the same political implications that an outright loan fraud would have.
Absolutely. Would you agree, Hemendra, with that assessment that we are in danger of losing sight of what was essentially an operational risk, and this was a fraud out and out, lack of systems and procedures in PNB? Hemendra?
No, most definitely. I think what we are seeing is that people, and here I would say a very large section of the business media as well as people who represent the capital markets, are using this opportunity of the PNB fraud, which is no doubt a major shortfall in management, to push through this agenda of privatizing government banks. Now, this to me is a very ridiculous notion, because there are always frauds taking place in banking globally as well as in India.
We will come to the issue of privatization a little later, Hemendra. We are talking in terms of solutions. But my question really at this juncture, when we start the debate, was do you think it's been blown out of all proportion? Yes, 11,000 crores is a large amount, but we have seen what are not necessarily frauds, but we've seen NPAs, which are perhaps as bad, if not in terms of recovery, of much larger dimensions. So, are we somewhere losing sight, or what is the main issue here?
So, the main issue here at the moment is operational risk, and here in this case, no doubt it's a very large amount of 10,000 odd crores, but it can be resolved very easily. It could have been easily resolved, and it still can be through proper audits, internal, external, reconciliation of accounts. The solution here is very simple. But unfortunately, the whole, the debate has become one that of privatization and not how to resolve, operational risk management.
Absolutely. In fact, we might not want to accept it or admit it, TTR, but the fact is that you can never have banking without fraud, just like you never have society without crime. So, do you think that what one really needs to do in situations like this to prevent them from recurring is to ensure that your systems and procedures are as foolproof as possible, crack down whenever you find a loophole, and then mete out very severe deterrent punishment so the scope for future frauds is minimized? TTR?
Yeah. So, I mean, just as bank failures, individual bank failures cannot be fully prevented, so also frauds cannot be prevented perhaps with the most sophisticated systems and with the best kind of monitoring that you have. And we only need to remember some of the major operational frauds that have happened across the world, which have resulted in major losses or even the disappearance of complete banks. So, in 1995, Barings was brought down by a major operational fraud perpetrated by one rogue trader, Nick Leeson. In 2011, you had a major fraud at Societe Generale, which was unauthorized trades on the part of one rogue trader, which caused a loss of over $5 billion, which you must compare with the $1.77 billion loss allegedly ascribed to the PNB scam. And then in 2013, I think 2011, we had a fraud at Union Bank of Switzerland, UBS, which again inflicted a loss of about $2 billion. So, we are talking of some of the most sophisticated banks in the world, where systems and processes have been breached. And typically, in many of those banks, what you see are, frauds on account of rogue trading. But let me also say that fraud is only one kind of violation of rules and regulations which happens at banks, and it's a situation where insiders or outsiders or both cause a loss to the bank. But there are n number of situations where banks have themselves violated rules and regulations, the laws of the land, in order to benefit managers and shareholders at the expense of customers and sometimes at the expense of taxpayers. So, fraud is when you talk of fraud, it's a situation where you talk of the loss to the bank. But if you look at the generic issue, which is violation of laws and regulations, then the issue goes well beyond frauds as commonly understood. And those kinds of violations are pretty much the order of the day in international banking.
Hemendra, if, as both you and TTR and I also agree that in the case of PNB, it was essentially an operational risk, fraud arose from that, then and the angst is mostly because taxpayer money is going to be used once again to bail out a public sector bank. Could a solution be using insurance, as some people have suggested, insurance against operational risk? Would that be a better way of dealing with the problem rather than recapitalizing once again?
See, insurance in the end, it could be. But end of the day, the size of the loss, I don't know whether the insurance companies would come into such a picture at all, because operational risk is a very complex area which banks themselves should be monitoring very carefully. Now, in this country of ours, we always think anything, whether it is agrarian India, farmers, you put insurance. But, that really does not solve the problem. They can finally, who coughs up the money, whether it be the insurance company, the bank shareholders or the taxpayer. In my view, I think it's always important that the controls with every new fraud that you see, you have to learn your lessons and tighten the controls and the supervision of that. Insurance could be just one aspect of it.
Absolutely. TTR, even if we agree that there was a spectacular failure of controls and procedures in PNB, there are also questions to be answered both by the auditors as well as the supervisor and regulator of banks, the Reserve Bank of India. Because the fact is that the Reserve Bank of India is supposed to do an inspection of the banks. And even though it's very difficult, as we all agree, to catch a fraud, the fact is that there were transactions in the Nostro account which are very unusual, which are very large, and any inspector worth his salt, the antenna at least should have been picked up. But here we find the regulator has not been able to do that, because apart from the detailed financial inspection, the Reserve Bank also does a foreign exchange inspection from the foreign exchange angle, and both these inspections seem to have missed the suspicious transactions in the Nostro account. So, do you think something was found wanting from the point, both from the auditors as well as the supervisor and regulator of banks?
Well, I certainly think that where audit, there's a clear failure of auditors. I mean, there's a failure of internal audit and perhaps of statutory audit as well. Because if you're seeing an unexpected rise in fee income from the issue of LOUs, that issue should have been picked up by the auditors. I mean, what accounted for the sudden spurt in income? And this spurt in income should have been duly reported to management and the board, and the board should have been asking questions about the magnitude of increase in income. But about the regulator, I'm not the supervisor and regulator. I'm not very sure, because I think the procedure is for the bank to report the fraud to the supervisor, and then the supervisor tries to see what went wrong. Whether the supervisor can come in and uncover a fraud on its own is not something I'm very sure of. I mean, what you say is true, that the RBI does look more closely at nostro accounts, given that foreign exchange is involved, but I'm not sure that it's part of the mandate of RBI to be asking questions about, say, increase in income, fee income, or that sort of a thing. So I think I would certainly say that more of the responsibility rests with the auditors than with the supervisor.
Hemendra, I'm not sure I agree with TTR on this, that because to my mind, both the auditors as well as the Reserve Bank of India share responsibility for this. And if I were to stick with the Reserve Bank of India, just recently the RBI came out with a press release saying that it already cautioned banks on use of the SWIFT system and how it needs to be integrated with core banking facilities. But should the RBI be absolved of failure to notice the unusual transactions in the nostro account of the PNB? Because yes, as TTR said, fraud has to be finally caught by the bank, but the idea of an inspector is to raise questions whenever he finds suspicious activity, and certainly in the case of the nostro accounts, there were suspicious transactions. So I'm not sure I can absolve the RBI entirely of the responsibility in this context. Hemendra, would you agree?
See, normally you cannot expect RBI to do a thorough inspection in the time that they have when they do the inspection. But what they do is a dipstick analysis for such things. Now, if they had done a dipstick analysis of the nostro accounts or even of the SWIFT messages at this particular branch, they would have realized that you're getting some very large transactions. And one of the cardinal rules of banking is wherever there is higher income and higher profit, there should be higher risk, and therefore both internally and externally, wherever you're seeing higher income, you have to examine it more closely, because there's no such thing as higher income without risk in banking. And therefore, in my view, the RBI also has to take some responsibility, because in the end they are there to protect the depositor, and they have to ensure that the bank's internal systems in whatever activities they do are sound.
So let me just stop you there for a moment, because it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with Hemendra Hazari and T.T. Ram Mohan on the recent PNB fraud, but we are trying to look at it minus the hype to see whether it's possible to bring some balance in the debate, which has gone completely out of kilter. TTR, if one were to as I said, continue with the role of the Reserve Bank of India in this entire episode, could it be, and I'm just hypothesizing, could it be that in the past few years, the RBI's focus on inflation targeting has somehow made the bank take its eye off its other roles, particularly the role of supervision of banks? Because even if you look at the AQR which the RBI did in 2015, the fact is that the RBI suddenly found accounts which all along it had certified as kosher. It suddenly found that they were not okay and wanted the banks to make sharply higher provisions. So is there a sense that there is lack of expertise of commercial banking? And this is partly because there is not much lateral entry, there is not much understanding. There is a great deal of theoretical knowledge in the Reserve Bank of India, but when it comes to commercial practices, and as we know, practice is very different from theory, there is a lack of understanding of commercial practices, and this might be in some way overcome if the RBI were to allow lateral entry, if the government and the RBI were to be more serious. As we have seen, the post of Deputy Governor of the Reserve Bank of India in charge of commercial banking has been lying vacant for the past 7 months. So this focus on inflation targeting is perhaps in some way responsible for taking away its eye from the other roles that it plays. TTR?
Well, that's an interesting hypothesis, and I know that people have serious issues about the RBI doggedly pursuing this inflation targeting mandate. But let me just share with you that as somebody who's been sitting on the board of a bank for many, many years now, that the impression I have is not that the annual financial inspection report has in any way been losing in terms of quality. In fact, many of us who have been sitting on the board, and also I think members of top management, have been pleasantly surprised at the rigor of these reports and the ability of the RBI inspectors to pick up things that have eluded both management and the board. So in fact, for me, it's very often a pleasant discovery that some, inspector who comes in for a few months is able to flag fairly serious issues that have eluded both management and the board. Now, of course, some of the issues that you raise are relevant, whether you have people who are sufficiently trained in commercial banking, especially the more specialized aspects such as foreign exchange or treasury, and whether some sort of lateral entry will help improve matters. I think those are all issues which RBI should be addressing itself to. But it's also true that the RBI invests a very substantial amount on training its people, and it's very liberal in terms of sending people for very advanced courses both in India and abroad. And this can always be supplemented, as you rightly pointed out, by bringing in through lateral entry of specialists. But but again, to give a very short answer to your question, it's not my impression that the supervision of RBI, as reflected in the annual financial inspection report, is wanting in quality.
Okay, well, that's very good to hear. But Hemendra, now if I can shift to the role of the auditors, why are so few questions asked about the auditors? In fact, we find the ICAI, the Institute of Chartered Accountants of India, is also singularly silent, and we've seen time and again, after all lending is basically done on the basis of balance sheets, and if the balance sheets themselves are found wanting, how can we make any kind of commercial decision, whether it is for lending or anything else? So why are so few questions asked of the auditing profession, Hemendra?
See, because the auditing body is a self-regulating body, and as we have seen even in earlier such self-regulating bodies, they very rarely will pull up their members. You require an external agency to monitor them. You will find, I've been monitoring such huge divergences which are fudging of the books of bank accounts, and these have all been endorsed by some highly reputed auditors, but you see no action has been taken against them by the auditing body, by the regulators. No shareholder, no institutional investor has been demanding their resignation. So unfortunately, the total checks and balances in our entire society has collapsed. It's very easy to blame the regulator all the time, and yes, the regulator has to take part of that blame, but it is the role of analysts, which is my profession, of journalists, to keep highlighting these things, and sadly I really don't see that happening even in the broader media debate on in this very critical area.
TTR, if we can move now from the fraud per se to answers and solutions. Increasingly, there is an opinion being voiced, in most of media really, that the answer to all these things, solutions, frauds, NPAs, is to privatize the banks. And that seems to suggest a singular lack of knowledge of banking experience worldwide as well as in India. In the 1992 Harshad Mehta scam, there were two banks involved, State Bank of India, a public sector bank, but the other bank was ANZ Grinlays, a foreign bank. And if you look all over the world, the most infamous LIBOR scandal involved almost every blue chip name in the banking industry. So why is privatization seen as the answer for both frauds as well as NPAs? TTR?
Well, this is clearly an ideological position that some people have taken, and so they want to use every single episode and every single event to push the privatization agenda. I mean, it seems downright silly for me for people to be sort of pushing this after all that we have seen in the last financial crisis of 2007-2008. The colossal failures of management, governance that we have seen, which resulted in some of the most spectacular collapses, which inflicted a crisis on the global economy from which it just started recovering. And after seeing all this, these are all privately dominated systems which went into collapse. So after all that has come out in terms of the lapses that happened during the financial crisis, to say that privatization is the answer, seems downright absurd and delusional to me. And one of the things which I've noticed in my interactions with foreign investors, I used to notice this in the early days when the financial markets were open to foreign investors, And many of them were saying that they were very happy to invest in some of the blue chip public sector companies, because one of the things about being in the public sector is that you can be more sure about the accounts than about the accounts in private sector companies, because of the multi-layered auditing. So, in addition to the statutory auditors, you have the CAG audit, by which a lot of foreign investors set a lot of store. And so, to somehow imagine that, privatization is the answer and all frauds and failures of this kind would disappear with privatization is nothing but part of an ideological agenda.
Absolutely, but unfortunately, TTR, you and perhaps Hemendra, going by his writings, and I seem to be in a very, very minuscule minority, because Hemendra, if I may quote from an article that you had written earlier, you had in fact questioned whether the RBI's recent moves, and I quote, are part of a deliberate strategy by the government under the influence of the IMF and the World Bank to forcibly convert government banks' market share and privatize them so that the private sector has a larger share. And in fact, he says, ironically, in fact, you say, where there should be no crisis because of sovereign ownership, a crisis is emerging on account of government bungling or a plan to eventually push privatization and assist private banks to increase their market share. And where there is a problem of serious misreporting of accounts, there is no panic, as there appears to be a cover-up with negligible publicity and mild regulatory disapproval. The very fact that there has been no run on PNB, whereas a couple of years ago there was a run on a very large private sector bank, should show that the public faith in public sector banks remains. So, why is there this push for privatization, and why are the three of us lone voices in this arena?
See, because the essential issue today is that the IMF, the World Bank, and now today more importantly private global capital is calling the shots, and private global capital always wants more and more financial assets to invest in. And also what is happening, if you read the earlier writings of Dr. Arvind Subramaniam or even the recent utterances of Dr. Viral Acharya, they are very concerned that the public sector market share is still holding, and therefore to give an opportunity to private sector banks to increase their market share in banking. In fact, Arvind Subramaniam had earlier argued that we must deliberately, kill some of the public sector banks so as to allow the private sector banks to grow. Now, if that is your overall agenda, it is therefore no surprise that you will use any excuse to push the case of privatization. That's what we are seeing is happening. All these individuals who are screaming for privatizing the government banks, they all in some way benefit from private global capital. Either they represented those interests earlier before coming to government, or because of the institutions they had and the kind of guests you invite and the columnists you invite to write are all linked to that. So this agenda is very much there post 91. It has been reinforced, and the whole idea is that under this mistaken belief that private ownership is more efficient. Now, we have obviously seen that in the times of Lehman, where they actually collapsed the entire global banking system practically and global economies. So this whole notion that private investment is efficient, has been, totally exposed. And we have seen this, as you very rightly pointed out, in the kind of, they have been rigging, the foreign banks globally have been rigging practically every market they operate in. And this is the whole bastion of capitalism. If your market is rigged, then what do you say about capitalism? But there again, you hear anybody saying, let us nationalize these foreign banks for the gross incompetence that they have displayed.
But Hemendra, in fact, that is what the UK did. It actually did nationalize Royal Bank of Scotland when when they had the 2008 crisis. So I think there is no black and white. There are different shades of grey, and it's very important to get the shade of grey right. But TTR, if you look at the angst about public money, taxpayer money being used to bail out banks, the problem really is that when it comes to banking, because it's very different from any other kind of industry, regardless of whether it is a private sector bank or a public sector bank, there is the issue of too large to fail. So ultimately, it is always taxpayer money that comes to the rescue of banks, regardless of ownership. Why is it that this somehow doesn't seem to get either the attention of the public, perhaps which is not so well informed, or even of government and policymakers who should be completely aware of this aspect of banking? TTR?
Well, the answer is obvious, because there is a massive vested interest, as Mr. Hazari has pointed out, in favor of privatization. So you will always conceal the facts which don't support you, and you will try to highlight the facts which favor your particular agenda. So, I mean, you are very right in saying that banking failures are ubiquitous and bailouts by government and the taxpayer are also ubiquitous, and therefore, the way you would compare public ownership and private ownership is to see where the costs are much greater. And I've documented this time and again using a number of studies, and you would find that the minimum cost to government anywhere would be something like 5% of GDP, the recapitalization cost incurred every 10 or 15 years. Whereas in India, over the entire post-liberalization period, the recapitalization cost has been less than 1% of GDP. So, if you are talking of the cost to the taxpayer, it does seem that public ownership in India has inflicted a cost on the taxpayer that is substantially lower than the costs incurred by governments in privately run banking systems. And this should sort of settle the debate about banks, public sector banks imposing frequent costs on the taxpayer. But these basic statistics are ignored in the debate, and you will just highlight some random number saying government has infused the latest recapitalization involves a cost of 2 trillion crores or whatever it is, without relating it to any context or without looking at it as a proportion of GDP or whatever.
Absolutely. In fact, that is the tragedy, because while one can understand people taking an ideological position, it is very tragic when so-called informed policy makers in the banking sphere, particularly in the Reserve Bank of India and in the Finance Ministry, make the case for privatization, completely ignoring the facts and figures and experience as the track record that we've seen. But I'm afraid we are very much in a minority on this, and I do hope the government, even though perhaps it doesn't go with the mainstream opinion, will at least lend a ear and hear what we are saying and think again, what are the answers, what are the solutions, how do we minimize fraud, how do we minimize NPAs to ensure that the burden on the taxpayer is as little as possible. Thank you so much, TTR and Hemendra. It's welcome to hear another kind of voice giving a different perspective on something that the mainstream media also has completely taken over and given only a one-sided picture. Thank you very much for joining me and shedding a different kind of light on the issue. Thank you also for listening. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.